Hi, everyone. Welcome back to Regulation Rundown. My name is Alayna Gardner, and I am joined by our wonderful CEO, Jim Paolino.
Hello.
And we're going to talk a little bit about all the joyous things happening in the mortgage industry
Yep.
this month. So I think we have to start with 50-year mortgages, right?
Yep.
Because why wouldn't we?
Sure. They made the point that when 30-year mortgages came out, it was probably sounded really weird to people too. I think it's ultimately a good thing that we're all talking about different ideas and different ways
Mm.
of addressing people's ability to right. I think that's super duper important. I think the entire industry agrees that 50-year mortgages are not an effective way of doing that.
Yes, I
Mhm.
don't think they're the right answer. And I think like one of the things that I really learned when I went through like the school of mortgage banking when I
Mhm.
did my AMP was just how traditional a 30-year loan is, right? And in comparison, like this product doesn't exist anywhere else in the world,
No.
right? Like, this is a US specific market for these 30-year loans. And I think to try and extend that, like would be a little insane. And I also just don't think there's the market for it, right? I think there are 40-year loans that are out there that are all portfolio loans that are
Mhm.
available. And you haven't seen, like, if they were successful, you'd be seeing them in every non QM shop.
Mhm. I also think it doesn't address the real problem, which is the supply of homes,
Hmm.
right? So giving a bunch of people more money to buy a amount of homes that's not changing ultimately just means that the price of homes are going to go up. And
Hmm.
then any savings that you get for lower mortgage payments are going to go way down too. So those savings would kind of be disintegrated by price increases, never mind the interest, ability to build equity, all of the other things that would happen if you extend out the mortgage time frame. So I would like to see the real crux of the problem addressed, which is was it 5, 6 million units shorted in terms of the number of homes in the country that
Yeah,
so more supply solve a lot of issues.
exactly.
And speaking of things that have worked in other countries, I know they suggest portable mortgages, where basically your mortgage follows you as a person as
Mhm.
opposed to being attached to the property. I think it works well in other countries because there's no secondary market for mortgages, right? We have
Mhm.
family, we have good friends who are in the UK, and basically their mortgage is just everything's variable from what I understand
Yeah.
because the bank holds it, they change the interest rates on it based off where it is. That's how they protect themselves. There's no reselling, no secondary market. So if you're moving and you have a portable mortgage, they basically just redo your credit, underwriting again, and then that mortgage follows you. Maybe they keep the terms or it continues to be variable. But obviously, very few institutions actually hold on to mortgages that they originate. So that would make it a lot more complex in our system.
Yeah. And we're just not built for it. And I think to a lot of like we've seen a lot of these things come out kind of on Twitter, right? And I think there's this piece of, and I've seen this a few places online, of then what it creates is confusion amongst borrowers of are these products available, all of that, right? So I think that is one of the biggest pieces is, just making sure that we're not
Yeah.
confusing borrowers and making sure they know
Yeah.
what's available today, is going to be really important.
Like it is fun, but people who are
Yeah.
in mortgage are asking me about this type of stuff and it comes up like so I do get excited when it happens, but they're usually not ideas that make a ton of sense.